Okay, so we're recording now. So that means Jacob, watch your mouth. No swear, no swear. Okay, so let me see here. I'm going to share my screen, and do you see? I for whatever reason I pulled. I got Nathan now in the corner. Nathan, can you nod and tell me? Do you see the exercise? Perfect. Okay. So I'm going to read number 13. I think today we've got 13, 15, and then a couple problems before we go into 17. So I'll just read number 13 here a minute. Oops, I'm in the wrong chapter. All right, number 13, it just has, okay, these 4 different jobs. And it says collegiate began printing operations on March 1, jobs 301 and 302 were completed during the month, and all costs applicable to them were recorded on the related cost sheets. Jobs 303 and 304 are still in process, so they're not done, and all applicable costs except overhead have been recorded to those sheets. If you look at 303 and 304 there, you see all the other costs are there, it's just not overhead. And then it says, in addition to the materials and labor charged directly to the job, there was $4,500 of indirect materials and $8,200 of indirect labor. So would you not agree those would be overhead items? Okay. The cost sheets for the 4 jobs entering the production during the month are as follows. Okay, jobs 301 and 302, 303 and 304. Okay. Journalize the summary entry to record each of the following operations. Letter A, the direct and the indirect. Okay, so first of all, if you go through and add up all the direct materials for jobs 301, 302, 303, 304, so the 12,500, the 18,750, if you see that in your text, the direct materials for 303 and 304, that total is right here. 55,500. The overhead of 4,500 was what we read in that problem. Okay, and what we're doing is we're taking $60,000, that's the sum of those two, out of materials, and we put them to the job and into the overhead bucket. Okay. Letter B, it's the same thing, but now for labor. Well, the reading had told us it was $8,200 of indirect labor. You go through all 4 jobs and add up the labor, which is direct. That's this number right here, 106.8. That's a credit to all of wages payable. Okay, any questions on A or B? Okay, and then letter C, it says the factory overhead that is applied, and it says they use a single overhead rate based on direct labor costs. So they don't tell you what that rate is, but we can calculate it. And by doing so, we can apply it to the other 2 jobs. So if you look at 301, for instance, there was overhead of $7,750 applied to it. And it said it was based on direct labor costs. So 7,750 divided by 31,000, that's the direct labor, that equals 25%. Well, let's just make sure that we're doing it right. If you look at job 302 and you take 10,550 divided by the direct labor cost, that's also 25%. So we know it's 25%. So then for jobs 303 and 304, all you need to do is take 16,500 times 25%, and in your book, why don't you write the number 4,125? That's the factory overhead. And for job 304, you take 17,100 times 25%, and you get 4,275. So I put that in your book. Then for letter C, the entry is you add up all 4 overhead amounts, 7750, 10550, and then the two numbers that we just added, 4125, 4275. That's 26,700. Or if you look in the book, excuse me, if you look on this screen, what we say factory overhead was being applied at? 25% of direct labor costs. Well, look at here. This is direct labor for all four jobs. Take that times 25% and you'll get 26,700. That's what they're doing right here. Questions on letter C? And then letter D, it just says the completion of jobs 301 and 302. So if jobs 301 and 302 are done, you can look at those two totals, 51,250 and the 71,500. We're moving it from WIP to finished goods. That's all we're doing. Any questions on letter D? Excuse me, on number 13 for that matter, all of 13. Anybody? Notice here we're just taking it out of materials and putting it to the job or to overhead. What are the three costs to a product? Right here, materials, labor, and overhead. Putting it to the job, put it in the bucket, put it into the job, put it into the bucket, and then taking it out of overhead and putting it to the job. I'm just going to pick on Nathan. I'll start with you. So letter C, we're taking it out of the bucket and putting it to the job. Is that actual or is that an applied rate? Very good. Very good. And I don't know if you guys noticed or saw it. I have a video out there now of just talking about overhead and talking about over and under applied and this whole bucket that I refer to, that being in an account called overhead. And whenever you credit overhead, you know that's an apply. But whenever you debit overhead and you see anything where there's a credit to AP or to a credit to cash, that's actual, because whoever you're paying that that cost of that overhead, you know, whether it's real estate taxes, insurance, whatever, they don't want an estimate. They don't want a predetermined overhead rate. They want you to pay their actual invoice. So that's actual. If it's crediting to overhead, that's applying it to the job. All right, I think we beat that one. Any other questions on 13? Let's look at number 15. Number 15, I'm just going to do a cursory review over it. And if you got a question, you stop me. But so what I'm just going to do is just explain these journal entries. So July 3, of course, this would be what? If you think about this one right here, wages payable, salaries payable, it's going to the job. There's nothing going to overhead. So this is all direct labor. Here again, we are paying for something that's going to get charged to the job. Again, some more wages going to the job, all direct, right? All direct. Here again, all consultant fees or salaries, whatever, that's all the same, all direct going to the job. Okay, I'm going to pick on you, Madison, coming out of overhead to the job, apply or actual? Good job. Good job. All right. Jacob, now this one's just the other way around. We're paying for it and it's getting debited into overhead. So that would be excellent. Excellent. We're actually paying for it. So that's actual. Here again, we're using it. We're using it. So it's getting charged to overhead. We had it in a prepaid supplies account. Now it's just getting dumped into the overhead bucket. This one is nothing new. This is something from 225. It was salaries that we had put into a payable. Now we're paying it. Then the last one is we sold it. Or in this case, this is services. So we don't sell a product, but we're done. So whenever Go back to 225. Whenever you sell inventory, there's two transactions. AR, sales, but because this is a service, we call it fees. And then debit cost of goods sold and credit inventory or credit finished goods, right? Well, in this case, it's cost of services instead of cost of goods sold. And it never ends up in finished goods. Why? Because it's a service. So we don't put it on the shelf to sell. When we're done doing our service, it's done. So then it just comes out of WIP. It never goes to finished goods because it's a service. That's probably the only confusing part of this problem. Okay? And then, of course, this talks about the over and the under and whatever. And I think we kind of cover a little bit more of that whole understanding in that separate video. So I think we're all good there. Anybody have any questions on just this exercise number 15? Anybody? All right, we'll look at problem 1A. What's going on in 1A? So let's look at these journal entries again. So it gets to be really repetitive again and again and again. Here we go. We're just purchasing materials, right? Purchasing direct materials. Look at these three right here, A, B, and C. Right here. That's B, that's C. Materials, coming out of materials, and we're putting some to the job, some into overhead. We incurred some wages. Some are direct, some are indirect. Okay. Then they paid for some costs, or they charged it for that matter. They charged it. Some of it's administrative, some of it's selling, but they have identified some of it as being overhead. So they're putting it, so tell me, applied or actual? Well, because we're charging it, which we'll actually have to pay actual, this is actual overhead. Just like here, we had prepaids, just like we did up here with supplies, same entry right here. Here we go. So what we're doing is we're taking it out of a prepaid supplies or whatever it is. Some of it's getting charged to administrative, some of it's getting charged to selling, and then some of it's going to overhead. All actual. Incurred some depreciation expense. Some of it goes to the building of the office, some of it's equipment for the office, and then this has to be factory. And because it's factory, it goes into factory overhead. Okay? Then, as what we start talking about today, if it's getting credited, we're putting it to the job. Putting it to the job. And then the last is it finished. We're done. It no longer needs to be in WIP. It's now finished. And here is the selling entry. The only thing that's missing is the sales, right? Whenever you sell inventory, there's two transactions. AR, sales, cost of goods sold, finished goods. So they only give you that. They didn't tell you the sales number. Questions on problem 1A? Anybody? Hey, just real quick. Hey, Bryce, how are you? I didn't see you join us. Great. Anybody else? No, everybody else I've met. How are you, Bryce? Oh, good. Excellent. How did the call go? Good, good. So any questions, anybody on problem 1A? Anybody? Okay. Hey, just as all you have to do is nod, you don't have to answer, but you guys all know where to find the videos that I have of these same exercises on the LMS? Okay, good. That's good. Just as long as you know that, you can see that if you want to. Okay, let's